Hello everyone and welcome to CRISIL's podcast on consumer durables sector. Hope all of you are safe and healthy. In today's podcast, I would like to share our outlook for consumer durables sector. Post the pandemic, consumer durable makers have recovered faster than some of the other consumer discretionary sectors such as apparel and jewelry retail. This is driven by higher demand for home improvement products during the prolonged stay-at-home period. The sector is set to clock a robust revenue growth of about 20% this fiscal after a flattish run last fiscal. Growth in the current year will be driven by electrical appliances, which form about one-third of the sector's revenue and includes products such as fans, kitchen appliances, and lighting, among others. The electrical appliances segment is expected to grow twice as fast as white good makers, which form about two-thirds of the sector's revenue and includes products such as washing machines, televisions, refrigerator, and air conditioners. Higher growth for consumer electricals is based on factors such as shorter replacement cycle, necessity, and smaller ticket size. Hence, we estimate consumer electricals to outshine with 23-24% revenue growth this fiscal compared with 14-15% for white goods. Now, talking about the profit margin for this sector, despite the higher revenues, sector's margins are expected to moderate by about 100 to 150 basis points this fiscal. This is because of increase in the key raw material commodities prices such as copper, aluminium, and polypropylene, which is about 70% of the raw material requirement for the sector. Though raw material prices have stabilized recently, they're still about 30% higher than the average of the past two fiscals. Impact on profitability will vary across segments depending upon the magnitude of price hikes taken by them. For instance, consumer electrical makers have hiked price about 8 to 10% this fiscal, almost double than that of the average of about 3-4% price hikes taken by the white good makers. Therefore, we expect the operating profitability of white good makers to see an impact of about 200 basis points and remain in the range of 6 to 7% compared with a moderate impact of about 1,500 basis points on the profitability of consumer electrical makers that will remain in the range of about 10-11%. That said, despite the dent in profitability, traditional strengths of low leverage, asset-light business models and healthy cash accruals will ensure credit profiles remain stable for both the segments. Over the medium term, capital spending is also likely to increase given government's PLI scheme aimed at increasing indigenization of important components for this sector. We believe capital spend is likely to be done in a phased manner, which would ensure credit profiles remain stable for the consumer durable sector. Any material impact on profitability due to further input price rise and any large debt-funded capital spending by players will remain key monitorables. With this, we come to the end of the podcast. Thank you for listening in and stay safe.